Of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. It's Friday, 8:30 a.m. in the morning, 60 minutes to go until the opening bell. And boy, oh boy, we got a market to the downside yet again, folks. We have S&Ps right now down 87 points, trading at 29.28. That's about 110 points down from the highs that we had at the end of the trading day on Wednesday. Remarkable. The Dow Jones off about 700 points right now, 25,365. NASDAQ off 267 points, trading 83.82. We'll start things off. We're going to jump over to the VIX this morning. As you'd expect, that VIX spiking higher, almost up to the highs that we had last week. That is, on Monday, February 28th. Is that last week? No, that is last week. Yes, Friday, 49.48. We're in the fifth trading day, and we're approaching that level as volatility continues to persist. I'm going to jump right into the 10-year because we got a print last night of a yield of 0.7%. Just a remarkable print on that 10-year. We're currently trading 137.25. We're up a full point and 8 ticks, but we were as high as 138.04. You see the acceleration just prior to 5 a.m. this morning, and we'll jump over to that story because it is quite a story. There's your print. And, oh my, check that out. So jobs number, always exciting, doing the program at 8:30 in the morning. I knew the number was going to come out just as we came on the air. And check out that beat, 273,000 jobs added in February, non-farm payrolls. The number they were looking for was 175,000. So we'll get back into that number in a moment. Not sure the market's really going to care about that. The market will care about the number when we get March's number in terms of the impact this coronavirus is having. Bond yields, extend slide, a 10-year treasury briefly falling below, check that out, below 0.7%. The number, it hit 0.6947% yield, just remarkable where that 10-year is at. The 30-year down at 1.28%, the low for that 30-year. And checking in where we are right now, you're sitting at a 10-year yield of 0.74%. And we're going to jump right in it to the indices. We'll see if they get a reaction at all to that jobs number beat. Currently, the Dow trading 25,357. Pretty muted response. I don't think the market's going to care much what that jobs number has to say because it is not going to have an impact on the coronavirus and the next maybe 3-6 months, the impact it may have. NASDAQ 100, 83.82. I mean, for some context here, you back this up just to a couple days ago. The highs that we had on Wednesday at the close in the Dow above 27,000, and you're talking about the lows that we made this morning in the Dow, 25,254. You're talking about 1,700 Dow points from the close of Wednesday to the open of Friday. NASDAQ 100 trading at 83.86, getting a little bit of a pop on that 830 bar. We're up about 20 NASDAQ 100 points on the jobs. S&Ps 29.29, muted reaction yet again. I mean, we're about 10 points off the low that we made at 825, but poof, that's after falling about 100 points in the S&Ps. Crude oil, $44.06. Crude traded all the way down to 43.33. You back it up 24 hours ago in the price of crude. We were supposed to get an OPEC cut early yesterday. That's announced. We trade to 47.40. We just traded down $4 in just over 24 hours in the price of crude. $44.03 right now. Gold contract trading higher, but check out that pullback, even from 815. My goodness. Gold trading lower now, dropping $15 and dropping fast. Look at that run in gold. 1674 in the price of gold. Maybe the market's beginning to react a little bit to that jobs number, and the euro falling off as well. We get a little bit of a pop in dollar strength. Euro weakness, talk about a climb. Even you back this up as well. Quite a run in the euro. Early yesterday, 111.28. We just traded up 2 full pennies to 1 113.34 in the price of the euro, currently trading at 113.12. Other news out there you've got happening, maybe you heard about it. Jamie Dimon looks to be okay, but recovering from emergency heart surgery. So that news breaking last night. CEO Jamie Dimon recuperating after having emergency heart surgery to repair an acute aortic dissection. Co-presidents Daniel Pinto and Gordon Smith jointly leading the company as Dimon recuperates, jumping over to JPM shares this morning. This is a 15-minute chart, so you see the news. Maybe it broke at about 6:30 last night. You see the acceleration a bit lower. Now, JP Morgan with the market trading lower. We're opening at about 109 so far this morning. And S&P's getting a little bit of a pop on that jobs number. Jumping back to the chart, you see the acceleration. We were just trading at 29.20. We're 18 points up. In any other day, an 18-point jump in the S&P just would be a mammoth move. But today, after we've fallen about 100 points overnight, not quite an effect on the charts much just yet, but 273 versus 175. They beat by 100,000 jobs on that number. Quite a remarkable beat. Other news out there in terms of what we have happening. Pulling up, we got Costco shares getting their earnings last night, getting a boost from the coronavirus. Costco said the impact from the new coronavirus boosted its monthly same-store sales in February by roughly 3%. Now, what's remarkable is we just saw really the fears of the coronavirus heating up in maybe the final week of February. You could call it maybe the final 2 weeks in February. But February 1st, you did not have shoppers, in my opinion, out stocking up, stockpiling, and the fear of quarantines, etc. These last 9 or so days has been beyond busy, the CFO said, and those numbers getting into it, we'll try and pull them out. Stronger than sales than analysts were expecting. All right, they don't have them listed right away. I'm not going to spend the time on it, but nonetheless, Costco shares, COST. So there's your earnings last night. Pretty muted reaction. You did have some volatility from about almost, look at that one bar. We're looking at a 15-minute bar. You traded from 312 up to 322. Costco with the market down about $4 this morning. The conference call happening at about 5 o'clock. You also had BJ's out with their earnings early yesterday morning. BJ's actually closed the day in positive territory yesterday after quite a tough day for the market, and BJ's wholesale holding strong so far this morning. Checking into some of the commodities, I referenced it, quite the run for gold. I mean, you even back it up to last week, right? 1564 is where we ended gold last week. We're up to 1690. You're talking about $125 in the price of gold just this week so far. Gold backing off a bit so far on those levels. And the crude, quite a run of the inverse way. We were up to 48.66 in the price of crude. I mentioned it that yesterday we get some volatility about 6 a.m. You get a deal that OPEC was going to cut 1.5 million barrels per day contingent on Russia approving that deal. Not so sure that's going to happen. You see crude escalating. And this morning, yesterday, we got a surprise pop at 6 a.m. in the morning. This morning, 5:30 a.m., you trade from 45 all the way down below 43.50. Crude back under $44 at 43.95. Stay tuned, folks. I'll be coming back after the break. We'll talk about what else we have on tap on Friday. We'll get into that jobs number a little bit more. Blowout number for jobs, 273,000 added in the month of February. Stay tuned, folks. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So much for a pop from that jobs number. We get the S&Ps down 87 points. We get the Dow off 707. NASDAQ futures right now negative by 278. Getting into some of the numbers of the jobs number, we got at 8:30 a.m. this morning. And so there's your headline number. Jobs growth smashes expectations. Unemployment falling back to 3.5%. 273,000 jobs added during the month. Unemployment rate 3.5%, lowest level in more than 50 years. Economists had been looking for 175,000 and 3.5%. Average hourly earnings grew by 3% over the past year, in line with estimates. Average work week, considered to be a key measure of productivity, nudge up to 34.4 hours. More good news in the jobs market. The previous 2 months estimate revised higher by a total of 85,000. So the previous 2 months get revised. You add 85,000 there. You beat by about 100,000 from 175 to 273. You add those together, that's 183,000 extra jobs in this employment report that was not supposed to be there. Healthcare and social assistance led the way in job creation, 57,000 new positions. Food services and drinking places both added 53,000. Government employment grew by 45, construction at 42,000, professional and technical services 32, and finance rose by 26. I mean, market, waiting for this number. It's an important number for sure, but I think the market is going to be hanging on a cliff next month when we get the March numbers in terms of what is happening. I mean, we're in the second straight week of the market just going completely haywire. To pull up, I put on the front page of TFNN this morning, the morning market report. Some of the statistics are just mind-bending. So, of course, we covered it. 10-year yield crashing to 0.7% overnight. Actually got a 0.69 handle. You get, in terms of the moves we've had in the Dow, check out this chart from CNBC I want to highlight. How about this roller coaster ride? Now, this is, again, not going to include today, and we're approaching about 1,000-point decline in the Dow today. You start things off last week on Monday. You drop 1,000. You drop almost 900. We get a reprieve on last Wednesday. We're back to it at minus 1191, minus 357 on Friday. You start things off Monday thinking that order had been restored, 1,294 points. That a lot having to do with that the market was expecting, hey, did you see that week? Rates are coming down. Maybe we'll get a surprise cut from the Fed. The market goes up. Sure enough, we do get that surprise cut on Tuesday, 50 basis points. But guess what? The market says, you know what? We knew that was coming on Monday, and we're going to give back a lot of those gains anyway because that was already priced in. Wednesday, we get a pop. You could call that the Super Tuesday pop. Looks like Biden is in the lead of Bernie, two-man race. The market liking that Biden is there. But guess what? Yesterday, the market drops almost 1,000. We're going to kick it off, dropping almost 1,000 again in the market as the S&P is down about 90 points right now. And we're right near session lows. Those lows at 7:45 this morning, 29.15. You have the S&Ps trading right now 29.27, only 12 points away from that. Even from where we were at about 3 in the morning, we were up there at a high of 29.97. We're now 70 points below that level just from where we were at 3 in the morning. Just remarkable moves all over the place. Some of the other news stories I talked about in here, I mean, check out where we were just from Wednesday's close, which is right here in the chart of Wednesday's close. Didn't even go back to the high on this chart of 31.37. I believe Wednesday's close was 31.29, I want to say. The S&P traded down 200 plus points. Now, interesting, when I was doing this chart, 29.45 the S&Ps were trading at. I believe this was about 6:30 a.m. this morning, putting together the morning market report. Boy, oh boy, where are we now? We're at 29.29. How quickly we can lose 15 points in a heartbeat in the S&Ps, and that is with the jobs number, just crushing it out of the park. Couldn't be any better than expected. 100,000 jobs beat, 85,000 revised, and we are 6.5% back from where we closed in the markets on Wednesday afternoon. Remarkable, folks. Other news out there in terms of what's happening, you're going to start to see these stories. Apple's 5G iPhone launch may see coronavirus delay, Bank of America coming out. The highly anticipated 5G iPhone could see a delayed release as a result of the coronavirus, according to Bank of America, citing a conversation with an expert in the company's supply chain. The expert, Elliot Land, wrote that the 5G launch in the fall could see a month of delay. A month, not the end of the world, I imagine. If it goes longer than that, you could see a material impact. A month already material. The 5G phone, I myself have an iPhone 10. I'm probably waiting to see if I could just not weather it out. My phone's got a few problems with it. The home button clicks a little bit. The battery isn't perfect. But I got no reason to upgrade just yet. But I will when they launch that 5G. So I imagine that's going to be something a lot of people are waiting for. Jumping over to Apple shares this morning, AAPL. Like the rest of the market, Apple just getting clobbered, down $10, $282.80. Apple, for reference, was above 300 on the close of business on Wednesday. Jumping around to some of the other FANG stocks as we jump around. How about Amazon? Amazon shares 1872, closed yesterday at about 1924. Facebook shares 179.28, closed at 185.17. Google shares this morning at 1280. We were up at 1320 yesterday. And Netflix will finish it out. 368, closed at 372. How about Disney? They've been particularly hard hit with the coronavirus, closed at 113.98, 111.88. Some of the other stocks, Boeing shares, 255. The slide does not stop for Boeing. They were just up there at almost 300. They're going to open at 255. And the cruise ships, Carnival, a second cruise ship that looks to be at the center of a outbreak yet again. Carnival sliding dramatically yesterday on that news from 32 down to 27. Looks like we're going to open even lower this morning at 27.11. And some of the airline stocks this morning, it just doesn't stop. American, 15.13. Delta Airlines, down another $1.80 at 43.20. And United, trading at about 48.80, closed at 51.59. Other stocks out there making news. Let's see where we are. In terms of OPEC, so we talked about oil, down dramatically, almost $4 just from yesterday. No plan B. OPEC awaits Russia's approval for the biggest oil supply cut since 2008. OPEC announced Thursday that was the 1.5 million barrel a cut at the beginning of next month. The deal conditional on approval of Russia. Truly a go big or go home moment. That's the head of the global strategies saying basically they're putting the pressure on Russia. They want to get this done. It's a huge cut and they don't have a backup plan. And we'll see whether Russia takes that and goes with it or not. Other news just hitting the headlines this morning. Chipotle founder Steve Ells steps down from the board. CEO adds chairman to the title. So you got the founder, Steve Ells, stepping down from the chain's board, relinquished his title as executive chairman after current CEO was named the chairman. Interesting. I mean, you have a founder. Most of the time, you know, the nitty-gritty of running a business is going to be at the CEO position. To be the chairman of the board, you kind of just have a directional input in terms of what's going on. Chipotle, 712 this morning from 727. Not too much pre-market action yet on that. And as we wrap it up, come into this break, we're just going to jump back to the indices because S&P is continuing to slip. Right after that jobs number, we were up as high as 2943. We just lost 20 S&P points in a matter of about 15 minutes. Stay tuned, folks. When we come back to wrap up the program, we'll see what else we have on tap for Friday trading. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get S&Ps down about 90 points. We just got quite a spike down to below 2920 in the S&Ps as this market flirting with the lows that we had at about 7:45 a.m. this morning. In terms of checking in on the coronavirus, the headlines out there, quite a headline as you have the number of cases now surpassing 100,000 worldwide. The market reacting in general just to the escalating, you could call it pandemic, in the works. 100,000 worldwide. Total number of cases, 1,055. And that's an 8 a.m. update from data compiled by Johns Hopkins. Majority of cases in China, followed by South Korea, Iran, and Italy. You have the World Health Organization yesterday calling on all nations to, quote unquote, pull out all the stops on the fight of the coronavirus as it continues to spread outside of China. Some of the other headlines, it's, quote, unreal in Italy as coronavirus cases top 3,800. France infections rise sharply. Scary stuff in Europe where you're able to travel so freely with a European passport, whatever it is. France recording 138 additional cases Thursday, the biggest daily increase. They're now up to 423. I don't imagine that's going to be the end of that. You have Italy schools and universities closed until at least March 15th. Football fans not allowed in stadiums to watch matches. More people are being encouraged to work from home. A lot of that stuff, you're going to see that stuff start reverberating around America. I imagine it's only a matter of time, and that's what the market is trying to price in here, which they can't quite figure out. But we're going to see some volatility today, folks. I mean, we just got on that jobs number, a spike up to 29.41. You then traded back below 29.20, and we just popped more than 10 points in the S&Ps since that level, 29.31. NASDAQ 100, 83.86, and the Dow currently sitting 25,392. And for some context, on a little bit longer time frame, the lows in that S&P, 28.53, we hit last Friday, early in the day before we charged back and gained some of those losses back, 29.29 currently. That'd be the level to watch, that 2,900 level. We were flirting with it towards the end of last week, the beginning of this week, and we're right back down at that level. Stay tuned, folks. Larry Pesavento coming up live at 9. I'll be back at 10 o'clock with Tom. Live programming all day at TFNN. Should be an interesting Friday. We'll be right back.